Do you know how to identify profitable properties? Do you know that even if you buy an undervalued property, it doesn't mean that you got a good bargain, and it doesn't guarantee growth as well? Let me illustrate using this example. Allow me to share with you this market trend. In 2019, this development is selling at $2,880 per square feet on average. In 2020, it has dropped down to all-time low at $2,750 per square feet. At this point in time, you probably would have entered the market and purchased this unit because you think that the discount that you have gotten is a very good bargain. But who knows, in 2021, the PSS has dropped further down to only 2006. Let me show you what is the impact in terms of value. Imagine if you have bought a unit at 600 square feet. In 2019, it would have cost you 1.728 million. When the price dropped further down in 2020, this unit will have cost you 1.65 million and you will have a savings of 78,000. At this moment, you will have think that you have gotten a good bargain. But what happens in 2021? The price went down further at 1.56 million, making a further 90,000 savings. So do you think you still had a good bargain? Hi, my name is Jamie and I help my clients and myself to buy profitable properties. Properties like this, and this. Do you want to know how I spot these properties? Well, I have 5 quick tips to help you to spot your profitable properties. Tip number 1, look out for urban transformation. Are there any new infrastructures that are coming up? New MRT lines, new malls, new airport, new change of location for our ports area, and education sites, etc. So, is there any changes to the zoning of a certain plot of land? Whether the use of the land has changed over the years? These are some ideas that there will be actually more transformation happening around that area that may help to boost your property prices. Tip number 2, compare the market trends of the development to its surrounding. You can actually use some market tools online to actually help you to analyze whether there's potential of growth. Examples of some market tools that I will use are from HProp, SRX, and also Square Foot. I will put a link down below so you can actually take a look as well. Tip number 3, be mindful of the age of the property and the recent transaction. Do you know that you are not allowed to use all your CPF if the property is more than 60 years of age? Even if it's not your problem now, have you thought that it could be your potential buyer in future that is facing such issue? And if the potential buyer is facing such issue that cause the down payment capital to be lower, do you think you can actually have a higher profit margin? So now we talk about 99 years leasehold property. What happens at the end of 99 years? This plot of land will be returned back to the state or returned back to the previous landowner if there is still any more remaining lease. So does it mean that you get any compensation? No. It means that technically your property is actually worth $0. So have you wondered when the depreciation starts then, at what age the property will start to depreciate, so that when you enter to buy the property, you are not buying at a downward trend. The other thing that you have to be mindful about is actually the recent transaction. When you want to put in an offer, you don't want to be the highest bidder. Of course, if you are buying highest, it definitely means that your profit margin may be affected in future. So you also don't want to be the lowest offer, because by being the lowest offer, you probably won't be able to get the unit and you may miss the opportunity. So study the recent trend and learn how to negotiate with the seller to actually get the best optimal price. Tip number 4, look out for investors' properties, especially if their lease is expiring. Why do I say so? It's actually in the investor's mindset. When it comes to investors' mindset, they are very focused and very straightforward. There is no emotional baggage that's attached to selling the house. Meaning to say that once they are fixated on the price range that they are satisfied with, there is no shifting of goalpost or whether they will want to actually increase the value after that. So it also means that the transaction will be very swift and also very reasonable. When it comes to non-investors kind of property, there is a lot of emotions that is attached to the property. And when a good offer surfaces, the owner may not think so because of the sentimental value that has been added to it unnecessarily. So that's why if you can actually look for investors kind of property, you may be able to actually get a good bargain out of it. So why especially when the lease is coming to an end? Because when the lease is coming to an end, the landlord needs to find a new tenant. And by finding a new tenant, time is wasted, money is also spent because they need to pay the agent a commission to get a new tenant. And when there's a new tenant coming into the property, it may act as a hindrance to the deal for the next buyer if they are buying for own stay. So imagine if you are buying a property with own stay and there is a new fresh lease ongoing. So how likely would you buy the place or give a good offer? That is also why with this kind of situation, landlord like them will be willing to sell their property at a very reasonable price, and that is whereby you can come in to probably get a good bargain and have a better profit margin in future. Tip number 5, check out the demographics in the estate and its supply and demand. What if I tell you the recent price hike over the years is because of HDB upgraders? Do you realize that a lot of HDB upgraders have actually moved into private property once they have fulfilled their MOP period? If this is the case, do you think that it is important to know who are your future potential home buyers? In economic point of view, when the supply is low, the demand is high, the property price goes up. So the next time when you look for your property, do look at these 5 tips to help you to decide if the property is a profitable property. If you are interested to actually find out more or speak to me, you can actually click on the link below and I can guide you to find your own profitable property. Till then, I see you again.